Saudi Arabia's decision to lower oil export prices, as we reported yesterday, naturally led to a sharp drop in oil prices on the stock exchange. However, at the moment, oil has managed to recover half of its losses. So, apparently, this decision hasn't led to radical changes, but has rather limited the upside potential for oil quotes. Brent crude has lost approximately 3% of its value since the start of the new trading week. This significant price change triggered a speculative drop, with the prices falling below $76 per barrel. Subsequently, oil has been oversold for some time, meaning that the price is set to resume growth in the near term. However, if the price manages to stabilize below $75 per barrel, there may be a decrease in the asset's value despite the oversold signal. Also, when forecasting the future movement of oil prices, it's important to consider changes in the global supply, both from OPEC and the non-OPEC countries, with a special focus on the United States. The U.S. has entered an election race, and the current president, Joe Biden, is ready to take all possible measures to lower gasoline prices in order to gain voter support for his candidacy. Today, investors are awaiting the report from the U.S. Energy Agency to obtain new insights into demand and supply conditions based on the inventory data from the United States. Another crucial factor shaping price movements in the near future will be the upcoming meeting of the Federal Open Market Committee. Until then, the market is expected to remain relatively stable, avoiding sharp fluctuations even in the face of significant events. A noticeable drop in gold prices from last week happened as the market participants began to shift their expectations regarding the start of monetary easing by the U.S. Federal Reserve. As with the oil, the key factor in this case will be the outcome of the upcoming meeting of the Federal Open Market Committee. Therefore, over the next couple of weeks, no significant market changes are anticipated. However, the general outlook for gold this year appears quite promising, given that major central banks are poised to commence on interest rate cuts. As for the Russian ruble, it's currently trading at the levels where it closed the previous year. The pair is trading at 90 rubles per dollar, with occasional speculative swings appearing from time to time. The trading instrument is unlikely to go through sharp movements in the near term and is expected to trade sideways within the range of 89 to 92. On Thursday, Russia will release the inflation report that was delayed at the very last moment. The forecast remains unchanged. The growth rate of consumer prices is expected to accelerate. Typically, this would lead to a stronger national currency. In the case of the ruble, however, we can expect the opposite outcome. The local businesses are highly dissatisfied with the extremely tough monetary policy of the Bank of Russia. In fact, the central bank itself acknowledges a negative impact on the economy. Nevertheless, high inflation forces the regulator to continue raising interest rates. Therefore, in the coming days, we may witness a slight weakening of the ruble. That's all for now. We continue to follow developments in the financial markets. Subscribe to the channel and follow the news with us, and see you soon.